In this video, we'll look at what Jim Rogers has to say regarding the next bear market. Before we begin, please like the video and subscribe to our channel for more educational content like this. Let's get to the video. According to Jim Rogers, historically, printing a large amount of money has resulted in the debasement of your currency. When currencies fall, something must rise against them, and real assets normally rise against currencies. He believes that the future price of actual items will rise in the near future. They've always had anyway. You must also evaluate the supply and demand concerns. The United States is the world's largest debtor nation in history. It makes no difference who quits buying US treasuries. We have an issue, he said. Even if people continue to buy our trouble, we will have a problem. Nobody prints out money as quickly as the United States and Japan, for example. They still have interest rates in China, not enormous interest rates, but proper interest rates. There are no interest rates in Japan, Germany, or the United States. Some countries have performed better than others. Someone will come out of this in better shape than others who will come out in worse shape. The key, of course, is to figure out who. He has not yet responded. He's aware, though, that China is doing a better job than, say, Japan. He owns Japanese stocks because they print money every day and invests in ETFs. If they're going to buy ETFs, he'll buy Japanese ETFs. When there's an issue, people look for a theory to solve it. Karl Marx had a fantastic hypothesis, and many people tested it for a long period. These days, though, nobody wants to be a Marxist. But it was a fantastic theory. Now there's one called MMT, or More Money Today, that everyone adores. It's a fantastic theory and will probably do something similar in the future. Marxism was a free lunch for everyone, but it failed. MMT was a simple response, and people like simple answers. The US government has made it permissible for the Federal Reserve, the country's central bank, to purchase other assets, and should things become really bad, they'll do whatever they can to save themselves. They don't care about you, your children, or mine. They worry about the next election, he says, and they show it by purchasing IBM, Ford, or whatever they're gonna buy. It's simply a fact. Take a look around the world. We had a terrible situation in the world in 2008 because of too much debt. Global debt has risen dramatically since 2008. Because the debt is so much worse than in 2008, the next time we have a problem has to be the worst in our lifetime. Remember what happened in 2008. The next bear market is going to be worse than that. And that is merely a casual observation. There's a saying in the world of commodities that the solution for high prices is high prices, since high prices reduce demand and increase supply. That's exactly what has occurred. The other half of the adage is that low prices are the remedy for low prices. When prices are low for an extended period of time, individuals buy more and stop producing. These cycles have been going on for hundreds, if not thousands of years, and will continue to do so. Prices have been rising. We've had a high oil price and diminishing reserves of oil. Everywhere, known reserves were dwindling. People would offer you money if you could spell fracking before modern technology came along. A bubble then formed, and we all knew we had to make money. These guys have to pay their bills. As with all bubbles, the fracking bubble collapsed and burst. Fracking is still going on, but you have to make money. Except for fracking, known oil reserves continue to diminish, and fracking is no longer a bubble. In terms of commodities, we experienced a significant boom. Oil went from nothing to $150 per barrel, and it's now back to what it was. We had booms, and many commodities have experienced booms since then. Many commodities have risen and fallen in value. All throughout the world, bonds are in a bubble. Many equities are beginning to build bubbles, but not all stocks, as many companies are still declining. Commodities, on the other hand, are the only types of asset that are still inexpensive. Silver has fallen 45% from its all-time high. Sugar is falling 70 to 80% from its all-time high. Oil has fallen more than 50% from its all-time high, making commodities the only asset sector that remain inexpensive. Fundamentals are shifting. Now more people in America study public relations and agriculture. Obviously, if the world changes, you must adjust with it. That is fairly straightforward, he says. By the way, if you've made it this far into the video, do give us a like and subscribe to the channel for more content like this. Now let's get back to the video. energy remains as the most crucial commodity. In Singapore, everyone still drives or takes the bus to work, and practically all energy is derived from oil and natural gas. That could be changing. Even if you consider electric cars, which appear to be on the horizon, you must first generate the electricity, which must come from a source such as solar or wind power. However, electric automobiles consume 5 times as much copper as ordinary cars. So while demand for oil may fall, demand for copper, lead, lithium, and other commodities will rise. This year, Jim Rogers has not sold anything, and he has not sold anything short. He doesn't believe this is over. There are few central bankers in the world who understand what they're doing. India had one of the best, but it's no longer there. There haven't been many brilliant central bankers in history, so we shouldn't expect them to know what they're doing. Throughout history, they've printed a lot of money and purchased assets all across the world. This has resulted in inflation. They keep telling us that there will be no inflation. They simply don't know what they're doing. There will be more inflation, he says. Silver and gold have historically been popular strategies to hedge against inflation. And Jim doesn't believe the party is done yet. All of these guys will continue to print money, and when things get bad, the markets will fall for a bit. They are going to panic and they'll print even more money. They don't want to be laid off. They will go to any length to maintain their employment. It's bad for you, for me, and it's bad for the globe. But they don't care about us. They care about their jobs. When things start to fall apart, they'll print more money, and we'll have a big rally that will most likely be the last one. Throughout history, it has always resulted in an asset bubble. What's the deal with that? Because when products become extremely overpriced, a large number of new people flood into markets. Inexperienced people become happy and joyful, and then the bubble bursts, as it always does, and many people lose a lot of money. It will eventually pop. Many people will suffer as a result of this. Looking back at markets in the last phase, whether it's the last 6 months or the last few months, some very bizarre events have occurred. When you look back at the end of the 1990s, the Nasdaq doubled in 6 months, and it's always been that way. When they see things going up, people become really excited and exuberant. They don't want to miss out on it. They want to dive right in. In America, you have some pretty wild and crazy moves. It's also known as a blow off. You know, the market blows up, and when it goes up so quickly, and you would expect that to happen again, it will very certainly happen again when they begin creating money. And that's what Jim Rogers had to say regarding his last warning. What are your thoughts on this? Let us know in the comment section down below, and as always, do click that like and subscribe button for more content like this. See you in the next video.